Hi Ron, Stuart here again. Welcome to the proptrade.com. We got a live trading session at the moment, and this can be as long or as short as you want. Obviously, anything you want me to have a look at, let me know. We'll be scrolling through the majors, seeing what's going on, what's not going on. We'll have a review of quite a heavy day today, Thursday, 21st of August. Some interesting numbers coming out today. I'll go through them in order, but obviously the market's really on standby for tomorrow when Fed Chair Powell has his keynote speech at the Jackson Hole Symposium out in rural Wyoming. Last address as chair of the Fed. And lots of political pressure swirling around this week on both Powell and his members, the members of the FOMC. Lisa Cook was the latest one that's in the firing line from Trump administration. More on that in a little while. I've started tonight with the Bitcoin chart here. This is a 4-hourly chart on Bitcoin. And as we've been saying all week, we've been sort of ratcheting down from the all-time high we had here on the 13th, and we've just been moving lower ever since, basically. Because again, as I say all the time, watch the big-bodied candles. This might have been a sign here back on the 12th. 11th here, regardless of the time frame you trade, big body candles are significant, and that's what we've had in this downturn here. Quite a rapid downturn from a new all-time high on the 13th. So another big one here yesterday. Sorry, not yesterday, on the 19th. A little bit of a rise, tick up yesterday, but as we've been saying all week, the key level is the 112,000. We breached 114,000 with this big down candle here on the 19th, and 112,000. We're down 1% and a bit again today, over 1.5%. I think it is on a daily basis so far. Bitcoin, but 112,000 becomes a key support area. You see here on the 4-hour chart, this level here on the 2nd of August, and that 6 o'clock 1800-hour candle. If we go to the daily, you can see, as we've been saying for a while, what a key level 112,000 is. It was a resistance to the upside here at the beginning of the summer, and now will it prove support to the downside? We've moved down quite aggressively this week, as you can see. These are the daily candles now. And so 112,000 becomes the key support area. We did, as we were saying here back in July, weren't we, about the divergence we were possibly seeing here as price held up here. We were seeing divergence in our indicators, so some weakness, and then we moved down, but into the 50-day move now. Then we actually had a final rally to burst and move high. It looked like all was good. Until this big turnaround here on the 14th, and then we've shook out and moved down, and a big significant day earlier this week as well on the 19th, and here we are the 21st, heading into that 112 area for Bitcoin, so down day today. Guys, as I say, anything you want to have a look at, please let me know. I'll just do a quick review of where everything is, and then we'll have a look at some potential trading opportunities in the shorter time frames. We'll have a look at some scalping setups potentially, and see how we get on with the data. But just before that, let's just have a quick review of the day. So we'll come back to all the other assets in a minute. It's been an interesting day. The Jackson Hole Symposium kicked off officially today. Obviously, as I said yesterday, tomorrow's the key event with Powell's key speech. But all the world central bankers are going to be there. It takes place today, tomorrow, and Saturday. They leave late on Saturday. So all the leading, central banks will be there, and I've got speeches scheduled. This morning, we've had a raft of PMI data. Remember, that's a forward-looking data. The Professional Managers Institute moving manufacturing and services data. So generally, see, these are all green across, not across the board, but in general, been very positive in Europe. They're okay in Australia and Japan as well this morning. The notable exception was the manufacturing number in the UK. Was quite a significant decline, back to 47. But the services conversely moved better than stronger than expected. So eurozone back into into this expansion area here at 51.1. The UK services coming in very strong at 53 points on, very strong, but stronger than anticipated, 53.6. Across the pond in the US, we've had conflicting data today, but although the continuing claims have moved up again, another 12,000 to 1,9,722,000, reaching a sort of a bit of a cycle high here. The weekly claims, the initial claims as well, have ticked up, quite significant tick up from the last few weeks we've had. So back to 235k. So some not concerns, but questions over the jobs market. But again, we've got this conflicting ideas around, the immigration policy. Do we need to be creating lots and lots of jobs? The 250, 300,000 jobs that we have seen in non-farm payrolls in the past, given the current administration's approach to immigration and migration and emigration, should we say, or forced immigration. So that's a bit of a concern. However, later in the day, we saw PMIs with the US numbers from Standard & Poor's here beating expectations significantly. You see these numbers here coming out of the US, much, much stronger than we've seen in Europe here. So 49s and 50s in Europe. Let's say UK services at 56. 53.6, the highest rating in Europe. Over here, we're at 55.4 for services, and manufacturing, the composite at 55.4 as well. So being lifted by service. So good numbers in the US. Existing home sales also better than expected, 2% growth. We saw, there's another sales that was. Missed that. I can't actually, but yeah, there we are. Existing home sales over 4 million from 3.9 million. So that data dump today from the US is positive. We've got a stronger dollar today on the back of that. But still, the stock market's very much under pressure this week, despite some very good earnings from the retailers, mixed earning, some good earning numbers from the retailers. Target got a hit yesterday because of the new CEO coming in, being not an outsider. It was somebody being promoted internally, which is a bit of a surprise. But it was their forward guidance was a bit muted as well. Walmart talking about margins being squeezed today. Again, with a reference to the, but again with good numbers, but margins being squeezed, reference to the tariff impact. So we'll see. So as I say, as I said earlier in the week, Walmart for me sort of puts a mark, or used to traditionally put a mark to the end of earnings season. Obviously, the big daddy of them all, the current hot topic, the hot stock. Nvidia report next Thursday, so earnings get sort of dragged out another week. Really, there's most companies have now reported, but Nvidia, the top of the shop next Thursday. So watch that next Thursday. So again, better than you could argue better than overall better than expected data out the US again. So existing home sales PMIs. Bit of a question mark over this continuing claims number moving higher, and quite a significant, although 235,000 is still a strong jobs market. It's quite a significant jump up from last week's 225 to 20 area. We were under 219. And remember, a few weeks ago, we were at 240, 245. Looked like it was going high. It's turned around again. Went back to 220, and now we're back at sort of 235. So potential signs there, but we'll see what the next non-farm payroll looks like at the beginning of September in a week or two's time. So that's the data. The reaction, I say, has been a stronger dollar today. Bitcoin down. We just talked about that already. If we look at the majors, dollar yen's been our biggest mover today. 148.25 dollar yen. Big strong day for the dollar against the yen. Strongest day for a long time. Obviously today isn't over, but strongest day in all of this month so far. Obviously, apart from the big shock we had on August the 1st after non-farm payroll. So dollar yen, the biggest mover today. The Kiwi has responded, not necessarily against the dollar, but there we go. The Kiwis responded a tad against some of the other crosses today, but obviously we had that big sell-off for the Kiwi yesterday following the 25 basis point cut from the RBNZ and the weaker outlook. Expectations perhaps more to come. And so the sort of support we'd had this week around the .59 there for Kiwi gave up the ghost quite significantly yesterday, and we've continued a little bounce today, but we moved lower on open this morning. Can't really tell on that. We moved lower on open. We come back a bit today, but we're back at 58.20. So a significant decline this week for the Kiwi against the dollar. If you look at the weekly chart, it's a big old candle compared to where we've been recently. So a big move to the downside for the Kiwi today. Elsewhere, euro is trading at 116.15. Looks like we've been up in the last couple of hours, so into the 116 zone earlier. So that's looking on the hour. Oh, that is the hourly basis. Tick up. So that looks like we may have some long positions possibly on that one. Initial resistance 16.17. Obviously trading now. It's 6:15 here in London. UK stock markets closed an hour, nearly 2 hours ago. Obviously volumes have died off quite significantly, so any moves we'll get will be quite muted. Obviously, nothing we might not find anything at all in the next 30 minutes or so, but we'll have a look, see if anything's going. But if the rules aren't there, don't take the trade basically. So as I say, it's been the dollar that's moving. Dollar yen has been perhaps one of interest. So today's high. Sorry, it's the hourly chart. So today's high is 148.40. We come down in the last couple of hours. Is this a move lower? But it's been a strong day as we saw before. So see if it was got something in the dollar yen. Swissy has also been relatively weak today. 80 dollar Swiss. Again, similar pattern to the yen. Stronger move here into a resistance area from yesterday's high there, 18.92. It's cooling here on this in these hours at the moment. So not we'll give to jump into on that. We'll come back to everything at the moment in the shorter time frames. So dollars, the story of the day on the back of those that data we've seen out of the US on the forex side. Energies, the oil market continues to rally. We were short this earlier in the week, and we've got stopped out or closed it out. In fact, earlier yesterday afternoon, we were out for about 80 points, negative 80 points yesterday. So we were short here. There we go, catching literally just before the bottom. But that happens, doesn't it, my friends? That happens, going short right at the bottom of the market. But there we go. Such is life, isn't it? We stopped there. We lost about 80 pips, 80 points on that move, I think. But that's so US oil, that might have turned around, but certainly on this crossing strategy, it's been long. Yesterday morning here, even though we were short the night before. We should have come out earlier than we did, but anyway, such is life. $63 has been breached. $64 has been breached again today. Bit of excitement this morning as we came back down to 63.50 and then rallied again this afternoon. 64.35 is an upside target for US oil. Gold, on the other hand, has had an okay day as well. 3,340 today at the moment. We had a shakeout again this morning under the 50-hour moving average here at on the 11 o'clock candle. Under those previous lows from last week, the CPI and PPI days, the 11th and the 12th and the 14th last week. So we went in and tested that area again, and then moved off it. But again, as we talked about yesterday and talked about many times this week, that 350 area, 350 area is proving quite a resistance area. So we went through it into close last night. It was quite positive close last night. But again, sellers at 3,350, buyers down here at this 3,330 zone area. So we've got this $20 range today. We've been in, and we're petering out at the moment as well here on gold. So not a bit directionless also on gold. Really, not a lot of risk being taken on ahead of what Powell may say. Given it's his last speech as well, he's not going to get pushed into suddenly changing something. He's certainly not going to capitulate to the political pressure from the Trump regime. I mean, interestingly, remember the 7 members of the Fed. 2 of them, Collins and Bowman, were appointed by Trump. I mean, Jay Powell himself was appointed by Trump, but he's obviously not in the best in the good books of the president at all, and he's been quite personal about it as well. Trump, which is his way, isn't it? And so, although he's an appointee, he turned very much against him. Remember what he did with the Supreme Court? He sort of managed it, shall we say, for want of a better word, to be reflect the administration in his first term. And he's probably trying to. He is. He's trying to do a similar thing with the independence of the Fed. Markets won't like that, or markets don't like that. Hence the weakness we've seen in the dollar. And so this attack on Lisa Cook this week by him and members of her administration, accusing her of mortgage fraud, which is, that is, if it's true, she should resign. She's pushed back on that. Something, I think, I haven't looked at the details, but it's around 2 residencies and more she's taken on the back of that, where she actually resides. But again, it's just adding political pressure and noise around the Fed and trying to not destable markets, but it's this more noise around Fed and the policies of the leader. So ultimately, the leader has to take responsibility for that, and so it's more pressure on Powell. But as we said yesterday, and we've been saying for a while, obviously the September-October window is when Scott Bessent's talking about doing his interviews for the replacement of Powell. So somebody could get announced as early as sort of October, and then that leaves Powell with his hands very much behind his back into the May end of his tenure. So he's not a political character, Jay Powell. He's unlikely to get called into that, certainly at this speech tomorrow. That's just my take of things. So again, with the minutes yesterday, it really was just having reread them again last night. Not read them, but just re-look at the highlights. It really is, just Collins and Bowman that are very much in the focus about looking for cut rates. That was all. The dominance was all about the worry about inflation, but and it's not been as the impact of the tariffs is yet to follow through. But the hard data again today is quite good, isn't it, with the existing home sales? But anyway, gold 3,340 and indices all down again today. So the S&P 500 is trading at 6,355. We closed last night. I'm actually making a note when we closed last night, but we're down again today, 6.3. You can see here the hourly chart. We've been down most of the week, or all week. When was this? This was yesterday, wasn't it? Yesterday afternoon, just after close, we went into the 6340 zone. We moved up again, a bit of a weak break of the 20-day. 20 hour there, it's flat. It's, so again, you can see this new. Before we get some buyers, it is August. Volumes are low on this sell-off. That's the other thing to appreciate. But see what comes of tomorrow. And really, it's then after tomorrow. If there's again, I think we're building up what Powell might say a little bit too much. But again, remember, some players may have some positions they need to offload or change the composition of that, and they use these big news announcements sometimes to hide some of their data, some of their orders getting into the market, not only on the in the forex market, but in stock markets, commodity markets. These dark pools that the big banks have between themselves. So in the forex markets, they can come to light under these potentially high impact news events. So very unlikely to see any change of direction from Powell tomorrow, but has happened before. We've had a very significant speech from chairs of the Fed at this relaxed sort of meetings out in the summertime. So let's not prejudge things or try and predict things. Let's react to what's happening. But as you can see here on the hourly charts, S&P's been short. It's short on the 4-hour chart, and it's been a weak for the stock markets in the United States. 1, 2, 3, 4, 5 consecutive days to the downside. Lots of bounce back. Big wick on yesterday's candle for the S&P 500, but all of that has been given momentum to today's sell-off, basically. So we're down 1% again on the S&P today, and we are under the 20-day moving average. Let me just do that. So again, we're under the 20-day moving average. We talked about this yesterday coming into this. The Nasdaq's suffering more. Again, the stock sell-off for the tech sell-off took us under the 20-day moving average yesterday for the first time since the 1st of August, and the surprise, which was instantly brought back on the Monday from the non-farm pair. And we have to go back a long way before we had a close under the 20-day moving average for the S&P, all the way back here to the 21st of April. So, the 50-day, because as we said yesterday, 50-day moving average becomes absolutely critical at 22,800 for the NASDAQ. But that's under that last night into close, although it was a big wick down yesterday. It's our seventh consecutive day low for the NASDAQ. So tech stocks took us higher, and they're coming down more aggressively as well. The Dow, on the other hand, still holding above the 20-day moving average, although it's a down day on the Dow as well today. Again, see how that one closes, but that's looking like quite a big bodied candle at the moment here on the Dow. So let's see if there's any opportunity. So the day is down on the stock markets. Let's have a look if there's anything triggering in these shorter time frames. That would have been a nice entry here at just before I started talking there at Jatin. Good afternoon. Anything you want to have a look at, my friend? Let me know. Hopefully you can see the screen and hear me fine. Let me know. Bit of feedback's always encouraging. That would have been certainly a big short here at a rejection of the 50, because again it was looking like we were moving up there. It's a big turnaround, big engulfing candle. That would have been big entry there, and then again you could have entered here on an next close below the big down candle here at 1810. So is it too late to get into that short? Well, probably not, to be honest, given that we've had this big old wick here at 1445 when the data came out. That wick there, the 1445, corresponds to the PMI data coming out stronger than expected here in the United States as well, and then better than expected existing home sales. So we'd been moving low and it bounced up. Just booked a Nasdaq short and now online here. Okay. All right. Well, this is the Dow we're looking at on a short-term basis. These 5-minute charts, Jatin. I prefer the Dow to the Nasdaq. But anyway, it's there we go. As I'm speaking, it's moving up. But yeah, they're certainly that would have been certainly the short would have been triggered here. There on that time there it's 5 to 5 to the hour. And then if you've been really aggressive, you could have added on that one as well because of the size of the candle. The reason we're adding on that one is it's below that entry candle and it's also into the low of the the last hour or so. So that's the target area. That would have been the initial target area. This low of this period here when the data came out. But prices get moved for a reason, and so don't ignore this low down here. Maybe too much today, but certainly 44.56 there on the Dow to the downside potentially. But at the moment, we're short from here, we're short from there. My stop loss would be at the moment just above the 20-day, 20 period moving average. I think around about there, 44.773. So let's see how that one pans out on the Dow. We'll come back to that later. Let me forget. I remember last time I was talking, I forgot to go back to the chart. So let's just make a note of the ones we talked about. So the Dow short, and that's still in play. Obviously, if you'd only just taken it as we saw it, a little bit out of the money at the moment on that one. So that's the indexes. DAX will probably doing a similar thing. Remember, it's much later in Europe after the market's closed. But again, that would have been that's a nicer short there. We got the 20 crossing below the 50 here at 18.05. So 10 minutes after the Dow, that would have been certainly. Sorry, that would have still been your short. It's gone again at the same 17.55, but that would have been a move. And then the second one would have been this one. On this one, what we've got here on the DAX is a cross of the moving average. We didn't get that on the Dow, did we? Or did I miss it? No, it was earlier it was earlier here. It was back here at 17.25. But this is probably to do with the fact that the cash market is very much open in the United States. In Germany, the DAX, obviously the cash market closed hours ago. At 16.4. This is the close. So this is the cash close time. So we're lower than the close, basically, aren't we? 20, and that's you can see that. Hope you can see that number there. It's 23,100. So Nasdaq. Well, there we go. That's even more impressive. The Nasdaq, having tilted up, went back under here at 16.45. Similar pattern, but trading differently. So short there. Added to that one, could have added immediately afterwards as well on this one, the size of the candles again. But obviously the caveat for this one was we hadn't actually got through this low. There's the low there. There's still again. So again, it's that 17.55 candle taken as low for the day. So that would have been 3 big ones. And again, see why I talk about the size of the bodies of the candles being significant. It doesn't always work out. Obviously, look, we've been moving down here. There's a massive up clock. Again, that's data related though. We had a rally for 20 minutes, but the trend all day had been down. So we had a rally on the data and that's been sold off. See, we got lower, 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 and now we're lower again. So the data was positive. It took us up for a little while at the 3 o'clock data. But we've gone lower, lower, lower. And again, see the size of the candle. Jatin and everybody else has got this. On the big size of the candles. Jatin's saying here, it was a good short and 4-hour time frame, rejecting within the 9 EMA. Let's take it up to the 4-hour. Let's have a look what you're talking about. I'm sure hopefully you're right. There we are. That was yesterday. There's that monster candle at 11 o'clock. And up we go, rejecting the 9, down we go. So I don't know when you've got in, but there we go. Down to lows. And so we look to the left for potential targets, or one of my favorite ways of working out targets, remember guys, is the ATR. Remember what the ATR is? The ATR, this is the average true range. That's what ATR stands for. So it's the distance, the asset you're looking at has traveled typically over the last 14 candles. You obviously can change the settings, but over the last 14 candles on this chart, this particular asset at the moment travels about 130 points. You might want to, and that's the average it travels. So you want to be a bit more than that, both for your stop loss and your target. So many people use 2 times the ATR for setting targets and stop losses. I like to use 1.5 to kick off and then just close out some of my position and then move it lower if the trend is moving lower. What this is telling, this is a current candle, so we can't trade on that candle for another half an hour is the rule, because this is the current candle. It's not complete. There's still action on it. The previous candle, the 11 o'clock candle, as it's got there. So that's started at 11, finished at 3. This one started at 3. We'll finish at 7 my time here, so another half an hour to go. But that was a negative candle, so that was enough to get you in there. So you'd have been short on the, well, I'd say you would have been, technically the system would have triggered actually short here, there on the 7 o'clock candle on the 18th as a trend following strategy, and it would have added here. It certainly would have added there. And say current stop loss would be probably around about the 20, as I say, the 20 period moving average at 23,365 at the moment, but certainly moving lower. As I say, if we wanted to look at scalping trading now, Jetting, we would have been short here. That's coming back a bit, but and short from here, short there, and short there. And we're back to where we got in on our last trade. So see what happens there. Stop loss is round about here. So still sort of in the money from these earlier positions, but out of the money on that last 1755 trade there on the NASDAQ 100. There's also lower. So, stocks, as we said, have been lower all day. So we just added to the momentum to the downside. I say dollar, on the other hand, that's index metals. Let's do gold as well. See if anything's happening here. So again, gold would have triggered, last trigger would have been short of significance here at 1710 this time. I haven't been long here, and it's stopped out. So that's the last move of significance. So down here, and it's retraced, and it's closed above the mid one there. So you got a little bit. You've got to got in. Here on this trading this strategy here, you'd have got in there at 3,341.90, and it would have taken you out at 340.90. So it's got a bit of a dollar. Looked like it was moving up. But again, the trend has been sort of sideways action. So I'm reluctant to take that at 6 o'clock certainly, but a lower and then lower. So again, lows of the US session is this one here at the data at 1445 again. So 3,336 is the low from the data. So that could still be a downside target. If you were then added to because the trend is low, so you were below the 20, so you could have added to your position there at 1815, and then initial target would have been this level there, and then next target would have been here at 33761. See where because it's the wick, the low of the wick. This one from 1755. Remember that 1755 keeps popping up, doesn't it? Remember the stocks went down. Sorry, stocks went down for 15 minutes. The gold price peaked up for 15 minutes. Waited, but it stalled. Couldn't break away from the 20 period moving average. And so that's short there. Jatin's saying, what are you saying here, my friend? My sell was from top, booked partial around 23,400, remaining open. I want to buy 100,000 K position soon. Well, feel free, TradeX. It's up to you. I know there is a promotion. I don't know if you've seen our social media platforms. We've got a 30% discount coming next week, 26th to the 28th for 3 days only, as we run into the end of the month. So have a look at that next month if you want to hang on until then. Jetins, so thanks for that. And again, those 100,000 accounts, guys, massive amounts of equity, gives you the ability to trade all the things I talk about all some of the the forex crosses that perhaps you wouldn't necessarily have a look at. But they move as much as some of the majors. The spreads can be a bit wider. The liquidity perhaps isn't as good as you get on obviously euro, dollar, and yen, and sterling, and all the rest of it. But the pips can be quite significant. So I like pound yen. We had a good week. We've had a good trade on Aussie yen this week as well. The oil one didn't work out, but yeah, again, guys, that's trading. You can't win it. We don't win everything. And not a lot this week, actually. Euro yen was a loser, but we've made 65 points on the two Aussie yen positions. And a big closing winner from the 5th of, I think I said it at the beginning of the week. On Monday, we closed a position we'd held from the 5th of August for 300 odd points on pound CAD. And that triggered again last night, but I didn't take it. So I've been a bit quieter this week. So yeah, Trey, you're right. The beauty of the bigger account is it allows you to trade these positions. But whatever size account you have, you've got to trade with good risk management. And again, if you can do that with a small account, you certainly do it with a big account, because the bigger your account, the more actual equity you have. So the best of luck, my friend. Jatin, in gold, I only took one long side trade today, booked it, and that's it. That's great. I mean, that's the attitude, isn't it? That's how we want to be. Take what you see, get off, and don't be greedy. Gold for me, Jatin, has been just a mess, absolute mess, because I'm an end of day guy, and it's just it's making my teeth ache sometimes. It was looked like we were moving up quite nicely here at the beginning of August. And then we had that massive surprise on the 11th, and then we went messing about sideways. My moving averages are flat, and I'm just out of this. I can't get excited unless we break significantly above 350, which we had done earlier in the month. Looked like we were going to 340. We got to 3,400. We did, but we rejected it. So we rejected it quite significantly on the 11th, obviously, and then all the way down. But we don't want to test 3,200, 3,200. Sorry, 3,300, I should say. So we got $30 or $15 within $15 of that before we had that a good day yesterday, and everything was looking right positive again. But where do we stall? We stall yet again at these flat moving averages, big thick walls, 50-day, 20-day. If you imagine a moving average, either support or resistance, the thickness of the wall, if you like, the higher the number, the thicker the wall. So when you've got the 20 and the 50 together, that's a much thicker wall to get through than if it was just the 20 on its own, or just the 10, or just the 5. So the bigger the number, the thicker the wall, the more significance of the support of the resistance area is. And that's why so many people use the 200-day as well. So anyway, we banged into that. And then somewhat inevitably, shorts were in place around the 3,350 level. And that's what's happened today. We've gone down. So you can see the trend today has been generally down. There's that bang into the 350 area last night on close. So Asian session, European session, we were down. We had that big leg down middle of London time this morning, middle of the London morning this morning. We've recovered from that, but it's, where's it's recovered to? Well, it only recovered to 3,345, not 3,350. So we were $5 shy of 3,350, and now we're down in the last 3 hours, and we're under the 20-hour moving average. So we're under that as well. So here in the short term, we don't want to be looking to sell the market, and that's what's happened there at 1710. I would have added there at 1815 as well, and probably would have added there at 1825. So I'm short gold here on this short term basis. So Jackie, that's fine. I don't know if you've seen it. I don't know whether it's outside but I saw it yesterday, 26 to 28, 3-day offer towards the end of August. I'm sure it's I'm sure they're going to. The bosses will send that out. But so we're short gold as well here on our 5-minute time frames. Sorry, what would you say there? It's getting too hard as the range is getting smaller and smaller. Exactly, absolutely. That's exactly what I was saying. You know, it's a pain in the butt. But the other thing to remember, Jatin, is well, it's August. Okay, so volumes are low, big players are away. You know, everything gets back to normal after the Labor Day holiday in the United States every year. After the summer break here in the Northern Hemisphere, this year that's actually falls on the 1st of September. So we've only got a week to wait. Volumes get back to normal. Schools are back. Colleges are back in the United States, and you know everything kicks off volume wise. Everybody's back at their desks. The big players are back. The deals start getting talked about. The rebalancing of portfolio starts kicking in for the end of the year as well. The earnings season has finished and it's all booked. So we've got Nvidia next week. This time next week, Thursday. It is Thursday, isn't it? Yeah, Thursday. So yeah, all to play for. And this, you know, gold may suddenly start moving in a range, but at the moment, 3350 doesn't want to go above it. Doesn't want to go much below 3330. That 3330 we've talked about many times, haven't we? Or 3333, but here we are at 3338, and we're down again. So we're in the money on short gold on these short time frames. You're absolutely right. Since May, range is getting small. Absolutely, yes. That's what we were saying. And I say on the, you can't see my chart, can't you? That's what I was saying. It's just really pain in the neck, you know. If we zoom in here, it's just been absolutely rubbish, really. There was some legs up, legs down, you know, get alongside of these, and it can be quite painful, but, you know, trade them as you see them. You know, just because you think it should be going high, it should go through 3,400, should go to 3,500, didn't. You know, we had all the obviously the geopolitical worries, but all of that now, remember, seems to be moving forward quite quickly. You know, there seems to be some momentum with the Russian. Well, we'll see what Putin comes up with, but the Russian-Ukraine situation. There's momentum potentially with the Hamas-Israel situation. You know, that the offer from Hamas has been rejected from by Netanyahu by the looks of things, and they've gone in hard into Gaza City. It's absolutely heartbreaking what's going on there. But you know, thousands and thousands have died. But what a crazy thing to do on the 7th of October. But anyway, I'm dragged into politics thing. But as ever, the Israeli response is completely out of kilter. But anyway, as far as gold's concerned, you know, as you say, be careful, basically. So don't, you know, get too hung up on the wrong side of a position. Get out if you're losing, and live to fight another day would be my words on that. So short gold, wasn't it, on that in these time frames? So yeah, stop loss here, still tracking that lower. Let's have a look at if our index positions are still in play. There we go. We've stopped out on that one. So we're in a short here. It's turned around and it's moved up. So we'd have reversed our position there. So we were short from here, weren't we? Short from here, down, and it stopped us out as it's gone back through our stop loss, which was here. So we'd have lost a wee bit on the Dow there from there and from there. But now we turned long here. So just follow the rules, guys. You know, we've had a cross on the moving average. The MACD signal line have crossed here. So now, you know, don't get hung up. That's the beauty of scalping. You don't stay in anything for too long. You accept your losers when they come. And now we're long here, and our stop loss down. Actually, we could have it there at that level there, 44703. It's a bit tight, isn't it? On these 5-minute charts, but happy to take that long now. We've gone through the 50. The flat 50 moving average, even though we crossed. So we've got a cross here on this strategy there, as we've the 5 and the 9 have looked like we were moving lower. Didn't work out. Couldn't push to the lows of the data release, which is fairly understandable. Where do we go to? We went to the low of the candle. So there should have been, as I say, this was our first target area, wasn't it? We talked about the lows of the candles from the data release here at 4:45 and 3 o'clock my time. Extended trade, if it had continued, would have been down here at 44567. Didn't happen. So that's out. We've lost that one. a little bit of loss, and now we're in the money on this one here a little bit again. See if it turns back against us. So now looking to the upside, where's our first resistance? Well, it's through there, 44836 there, and then that high there from the reaction to the data at 1520 at 4486 or 44860 is really the target area to the upside, or second target area to the upside. First area on these short trades over here, 544836. Let's just put those ones on as well here on the Dow. So I'm guessing if the Dow's done this, the Nasdaq would have done a similar thing. So there's the two sort of area zones we want to get to. So just for round numbers' sake, so I'm not saying lots of different numbers. 44,875 and 44,840. Let's just round those up. So 44,840 to the upside, and 44,8, call it 870 for the sake of. Let's move that down a bit. There we are, 870. So here through these two highs here potentially, if the momentum continues up. We're in the money at the moment. And I'm pulling our stop loss up. Stop loss again at the 20 period now. So it's just behind our entry, and we're moving up. Nasdaq, I guess, similar sort of pattern on the 5 minute. There we are. So that was our entry. And again, similar thing. Interestingly, though, we'd gone lower than the data release for Nasdaq. So that looked more negative, if you like. But it's because we'd already got there. 5 candle. Remember, our second entry was already at the day low, so quite nice. But then again, it's turned around, took us out, closed out there. So a small loss on that last trade, but again, long here now on the Nasdaq on the 5 minute candle. That's our long as it's gone back up with the 20. Initial target probably at the 50. Start off with, take a little bit of profit off there. 23 150 through here. Then there's a glut here, 23 180, 23 180 I'd call that, I think, or it's maybe a bit high, 23 1, or even 23 200 if you want to stretch it. It's maybe see how that goes. So first target round about here, next target 23, call it 23 200 for the sake of a couple of points. See how that goes to the upside. But it's quite a V-shaped bounce, so see what that goes. There we go. Let's have a look. Jatin, good that I booked all round 23 or 50. Didn't want to hold till 2300 because of round figure. Absolutely, nothing wrong with that. Lots of people, have stop losses, resistance levels. It's a psychological thing. If you heard me say many times, these round numbers come into play all the time. Whether it's an algo, whether it's the latest AI trading robot, whether it's a human being, round numbers still play a huge part in markets, and woe betide anybody who thinks they don't, my friends. And I hear a lot of people skeptical about these round numbers. It is what it is. Don't get too hung up on it, and as you say, don't get too greedy, don't get too scared. Book things as you see them, and but let the trade run. And that's one of the big lessons I learned as a trend following trader. Trend can run and run and run. Just because you think something should be doing something, forget what you think, what your opinion is. Let the markets tell you what to do. So anyway, so we were the short didn't work out. The long's looking okay. We booked some profit odds on that. On the indexes, let's have a look at the majors before we go. Sorry, not the pros, the majors. So dollar yen was our big mover for the day. It's weakening a tad now, but not enough to take a short position. Short, long, it's flattening out. The euro 116.20. That's looking a bit more interesting. A positive tick through the 50 period for the first time. Is it going to hold it? Well, there's a significant resistance there at 116.20. So if you had gone long on this move higher here, 116.20 is that. You see that there? That low, the lows here, the highs here. That's a target area once we've breached this 50 period, this 50 moving average, and this candle here in the last 5 minutes or so. So Next target 16.20 for euro from the last move higher, which was here at 17.55. So it's gone long there at 16.11.1, and our target is about 10 pips or 9 to 10 pips at 16.20. I'll just shy 16.20. It's 116.19.8 for the euro, bouncing back against the trend on the day. I remember for the euro, because we've had a good day for the dollar. If we take it up to the hourly time frame, see euro's been down all day, and we're bouncing the last couple of hours as we got within a pip or two of 116. So we're back up to 20 points. Jadin, good to chat, my friend. Good to chat. Great photo, by the way, you got there. Very, very smart and very professional. Many times trades completely reversed just before the take profit. So stop taking exact take profit. If anything, around 90% take profit, I book it all now. Well, why not? If it's working for you, my friend, absolutely. You don't get too hung up on exact numbers. Absolutely not. Absolutely not. Unless you're really trading these short pip numbers. Round numbers is a great example of that. Sometimes it's like with gold, isn't it? We thought we were going to, people were talking about 3,500. We did get to 3,400, but it was on an intraday basis. We never closed above it significantly. So it was clearly running out of steam as we got into 3,400, and down we've come. At the moment, we don't want to go to 3,300. We've got as low as 3,030, and that's been a key pivot area for months, as you said earlier. Yeah, absolutely. Yeah, why not take it off the table? I think it was Jetting. I think I was promised to a few weeks ago. I tweaked. I was looking at the trades I've been doing in July, and looking at taking 80% off at target one and leaving 20% on, and the difference in the pip count. So normally I do 50-50. That's my default. So 50% at target one and leave half of it on to run and see what happens and see how it all balances out. And then comparing that to closing the whole trade at target one, compared to 80% at target one and 20% run until it gets either stopped out or hits an area that makes sense to me. Normally, I normally push the stop loss up and get quite aggressive with the stop loss, bagging profits, not wanting to lose profits, and the market turns around and takes me out, only to go on again. But it doesn't matter, because I've got there'll be other trades coming up, and there's only so much equity you can take. And again, that's another argument for what TradeX was saying about having a bigger account, $100,000 account, allows you to do that, or allows you to get back in if you got a bit too aggressive with your stop loss and got too close to the price action. It's taking you out, and you think, oh, actually, this trend is still running, and I want to take it. So anyway, I've been here for an hour. I'm going to wrap this up now because I'm really tired. I've had a really interesting, busy, stressful day on a personal front. So I will wrap this up. I'll see you tomorrow. I'm currently planning to go live for the data tomorrow. Excuse me. At 1:15 my time, so 12:15 GMT. But I might hang on for Powell's speech, but I might not as well. I might just preempt that, because again, I'll probably still have a look at the data, see what the data is, and do a wrap for that later on tomorrow. So do join me tomorrow for that. Let's just go back to our where we started. It was our index trades, wasn't it? The Dow. Whoops. On the 5, can't remember. Oh, it was the Nasdaq. Was it the Nasdaq? Which one we ended up with? The Nasdaq on the 5 minute was short, and then it was long. There we are. We're having a struggle with the that 50. Is it that 50 period move? Is that what we said? Yeah, 50 period moving average. But that's your upside target there. The Dow, similar pattern. We were short, didn't work out. Now we're long. That's actually breached already, so that's looking to run. But again, we're stalling at this previous level here from 12 o'clock. It's previous support here at 4 o'clock. So we've moved up, but see if that holds at the moment. Still in it, because that's spiked in the last 5 minutes down here. Hasn't got to under the 20-day moving average, where 20-period moving average, where our stop loss is. So see if we can move away from that 50 moving average there on the Dow on the 5-minute time frame. The Nasdaq was the other one, wasn't it? Nasdaq. I did make a note, didn't I? Yeah, Nasdaq short and then long. So that's still holding up, but that's still our target area around about that 50-period moving average for the Nasdaq. And finally, where we were was gold, wasn't it? Moving lower and continuing to move lower. Thanks very much. 3337.45 at the moment. So no problem, Jatin. Thank you for your time, guys. I appreciate it. Do join Jatin and others chipping in. If you don't want to say anything, that's fair enough. If you want an asset to have a look at, let me know. Let's have a look at before we go. Let's have a look. See if Bitcoin's actually breached 1200. It hasn't. It's actually picked up a tad in the last 20 minutes. So we've been as low as 112,132 on our platform. But again, you can see here, even on this 5-minute time frame, the 20-period moving average holding as a resistance there for 5, 10, 15, 20 minutes, and down we go again. So thank you for your time tonight, my friends. I hope that was of some use. Jatin, thank you for your comments, my friend. Trady, do have a look at that $100,000 account either this week or next week. I say next week there's a big discount coming. So best of luck with that. See you all tomorrow. Take care, stay safe, and let's end the week on a positive note. And let's see, bag some pips. I'm currently about, about 60, 70, 80 pips up for this week. It's been a very quiet week. Monday, we closed a lot of trades out. That pound CAD was of noteworthy. Today, we've closed out euro yen for a loss of 27 points and a gain of nearly 41 pips points for the Aussie yen trade from earlier in the week as well, which we closed the first half on Tuesday for 24.5 points, so 60 odd points on Aussie yen. Let's have a quick, before I actually go, I've said goodbye, but I don't think there's a lot of lots kicking around tonight again. DAX, maybe a short on the DAX by the looks of things. Possible long dollar yen. We talked about the dollar being the strongest, the yen being the weakest today. So that's looking like a potential long dollar yen tonight. That looks relatively positive. Well, we saw there about euro yen yesterday. It didn't work out, did it? And elsewhere, there's nothing elsewhere. It's quiet. So, yeah. And it is Friday. Here in London, it's a bank holiday on Monday as well. So things in the centre of the Forex business, which is still London. Don't let anybody try and tell you anything else. Quiet Friday and probably obviously closed on Monday. So watch the liquidity on Monday. Okay, take care. See you tomorrow. Be good. Be safe. And may the pips be with you, my friends.